the anchor seat several times. Ramesh Damani, member of BSC, joins us now. Good morning, Ramesh. Thank you so much for being with us all through these 16 years, hand-holding us, and as well as being with us here in our moment of happiness.
Good morning, Lata. Good morning, Sonia. It's a very, very happy day for me to wish you happy 16th birthday. You know, 16 candles make a lovely light, and I hope you'll use the experience of the last 16 years to light and to continue on the leadership that you provided for Indian financial markets. So a very big day for all of you, and from Dalal Street, a very, very happy birthday to all of you.
Thank you, Ramesh. Thank you. It's always great speaking with you because, you know, you add that increased enthusiasm to us. We've been a bit dull because the market has opened up slightly soft and not moved too much. But since you came in, we've got this gush of energy. When do you think the gush of energy will come back from the foreign investors? Because that's been missing for a long time now.
I think almost certainly. I think they've been the fear about the Fed rate increase has kept emerging markets in check for the last few months. I think one and out of the way is that's the way I look at it. I think next week when the Fed meets, they will raise rates and they'll be done for a while. The US economy is doing very well, but not so well that it will ignore what's happening in Europe and emerging markets. So I think we'll have a rate hike, and I think come January the whole picture will look different. I think a lot of these foreign investors will start coming back, rediscovering India, rediscovering emerging markets. So I think, and as you know well, the mid-caps have held up very well. So I think there's nothing to be too pessimistic about. I think come New Year, there'll be glad tidings again in the Indian market.
Okay, I actually wanted to ask you that. Do you see green shoots, Ramesh? Let me start with the most immediate news that we got. It's only a recommendation yet, but the chief economic advisor seems to at least put the lid on the expectations of 27% and 25% GST. It looks like it will not climb over 18%. Is there anything to celebrate in that consumer durable FMCG space?
I think so. I mean, I've been reading reports, and you look through sector by sector. I think the auto companies will do well, the cement companies will do well. So a lot of companies will, benefit from a better GST rate, if you will. It's a fairly significant change that will take place in India. So my sense is that, whether it's that, it's always incremental reform. It's not one thing that will cure all things in India. But, I think there's been a big problem right now between the great divergence. Europe is lowering rates, America is increasing rates. So where does money flow? I think India remains a bright spot. I mean, if you're a domestic investor in India, looking broadly, bottom-up stock picking, you don't know what has happened. I think everything's just been absolutely fine out there. I think come January, money will start coming back in there. And, we look for leadership from India in terms of, you look at the themes that perhaps the better way to answer your question is look at the themes that will attract investors, we feel, over the next year. And I think, couple of the themes that seem to almost stand out. One is the financial inclusion, digital payment schemes that are now being touted. Bill Gates was in India a few days ago, and he said, an astonishing statement, he said almost 50 to 60% of transactions could go digital in under 5 years in India, which is an astonishing statement. If that happens, there are huge pockets of opportunities for investors, whether it's in payments, identification, Aadhaar-related schemes. So that's a good sector, right, for investors to look at. You had a previous interview with Aditya Ghosh. We remain bullish on airline stocks. Broadcasting is showing some new life. You look at all the stocks, they are churning well. So I think there are enough themes for investors. Of course, what you mentioned in GST, there are enough themes for investors to look forward that next year should be a very productive and prosperous year. So I think there's a good reason to feel optimistic in the new year.
Okay, actually, over the weekend, I was in Delhi, and on Friday, I was speaking to Bill Gates and Jayant Sinha and the RBI Deputy Governor and the TRI Chairman, all of them speaking about how digitization and financial inclusion together can make a very big difference. If possible, we'll get those shots. But yes, Bill Gates extremely positive about Bill Gates and Jayant Sinha as well, talking about how they can further use digitization and financial inclusion, and that of course will mean so much for the economy, especially consumer goods at the bottom rung. But Ramesh, the other theme that is not playing out is IT. I mean, TCS actually at new 52-week lows. We were just discussing that with Udayan as well. Will that see better days in 2016? people long and medium term and near term would be in that stock?
I think there is some emerging market sell-off because these are such large, heavy-weighted stocks in the index. They're selling off with the rest of, the selling that comes from FIs. They've traditionally been the favorite for FIs. There is some problem in terms of the long-term future of these companies, in terms of, the size of the projects becoming smaller and moving faster. But, I mean, the way I look at it, Lata, I think that software is killing industry after industry after industry in the world, whether it's real estate, whether it's oil drilling, and all requires, application of software. Different kinds of software, yes. And will Indian software companies step up to the plate to do this? I think there's a good chance they will do that. I think since 2000 you've heard that India is a screwdriver software economy. There's a, cost-plus model that they cannot innovate. But they've proved over the last 15 years that they can swim with the tide. They can change. So I think to write them off at this stage would be perhaps a bit premature. I think clearly there are large challenges because projects will get, smaller in size, more productivity, automation will happen in software. But at the same time, world needs a lot of software. And India's per capita penetration of the world software market is still fairly low. So while there'll be a lot of disruption going on, I think Indian companies will step up to the challenge.
Okay, well, just wanted to mention one stock, if we can pull it up. There's news on Godrej Properties, where they've got an overwhelming response to their new launch, which was the Trees in Vikhroli, Mumbai. And they say that they've sold 300 apartments in that one project within a week itself. That's more than 80% of the 374 apartments that they opened for sale. So Godrej Properties is now spiking up, as you can see, up almost about 5-odd%. Ramesh, your comments that you made remind me of a quote that Warren Buffett had made a while back, where he said that the stock market is a device of transferring wealth from the impatient investor to the patient investor. And this market has really frustrated the investor as far as earnings are concerned. We haven't seen any recovery just yet. The capex cycle hasn't turned. How long do you think it would take for this?
I think we should start seeing some green shoots of recovery, as I said, in the next, few quarters. I'm not very good on the big macro pictures. I don't really follow Sensex or Nifty earnings. I look at my stocks more bottom up. And I think, companies like you mentioned, which I own and I'm not recommending in any form, look good. I mean, I think they're fairly valued and they're, seeing some amount of, pricing power taking place. I think we are on the cusp of an economic earnings recovery. That's what I gather from talking to all my friends who follow these things very closely. But to be honest, I'm not, very sharp on, this quarter earnings or next quarter, because my view from the market is more a bottom-up, company-wide approach to earnings. In the space which I'm looking at in mid-caps, the stocks are so cheap, the earnings are coming through, and I see no reason to sell them. There's a lot of talk about mid-cap bubble going on. I don't see that right now.
Okay, what would cement be a space, Ramesh? I mean, that's where private and public growth should happily merge.
Yeah, it should. Again, it's not again a sector that I'm very, very, familiar with. I think there'll be some regional cement plays that will do well, particularly in the south. But again, this is not my strength. I would reiterate, Lata, I think the big theme for the market going ahead in the next 2 years, I think airlines can lead the market far higher because there's a huge delta going on there. I think broadcasting is finally showing signs of life. I think they'll come up with numbers that will surprise people. I think beyond that, this whole financial inclusion, payment gateway system, I mean, there are lots of opportunities for intelligent investors to look in those sectors. So as, as an investor looks at markets, these are the three sectors that I'm
You forgot your favorite stock or your favorite sector, the spirits companies, the United Spirits. I mean, don't you see any more uptick there, or is the best already done?
They will do well, but now they're now compounders. I think we'll see if GST comes in for alcohol also. That will be a big boost for that particular sector. If they include in the GST at some rate, that'll be a big, big boost for them. But, other than them, these are well-valued companies, So, I mean, I'm not... you tend to want to look for, multi-baggers, as you say, and, it's hard to imagine this stock going up 10x from these prices. So, I still own it, I still like it. I'm not recommending it, but, these are well-discovered ideas now.
All right, we'll leave it at that. Thank you very much, Ramesh, for joining us today on a very, very special occasion. And thank you for being with us, being part of the gang for all these 16 years.
Always a pleasure.
All right. On that note, let's take a break. And thereafter, our market master for the day, Vetri Subramanian of Religare Invesco Mutual Fund, is also joining us.